So the major problem is twofold, and we have a double whammy going on in Florida and across the country, especially California, anywhere where you had natural disasters, is property insurance rates. When a big hurricane comes through in Florida, right, we had, I don't know, $15 billion in damage, 13 companies folded in Florida, yada, 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 yada. But I'll give you the background. So real estate, here's the funny joke. I'll ask you a question. How are most millionaires made in the United States?
I would guess real estate, owning their homes,
right,
or property. Yeah.
Correct. I would normally have said that as well, right? Until I got into the insurance business. So I actually looked it up. You're right. Number 2 is real estate. Number 1 is the money business, right? And it's banking and lending. And who owns the insurance companies? The banks, right? So isn't it funny how, right, you're selling a home, we need a mortgage, you're doing the title insurance, right? I'm doing the property insurance. The bank is lending the money. They force you to get the flood. They force you to get the wind, the hazard, this, right? So it's the money business, right? And all we're doing is exchanging contracts for money. And if this happens, maybe we'll pay you, right? And things like that. So there's 2 factors at work. You have the hurricanes come in. Everything goes out. Everyone loses money. The banks lose money. The insurance carriers lose money. But this year we have a double whammy because the government, the Fed, has raised interest rates 550 basis points in 6 months. Okay? So it's important to understand how insurance works. Meaning for every dollar of insurance, there's also something called reinsurance, right? Lloyd's of London owns the reinsurance market. You may think you're with Progressive or Geico, well, Berkshire Hathaway's Geico, but 90% is Lloyd's reinsurance, including Citizens and state pools and things like that. So I'll give you a quick example. If I want to put out $100 billion in property coverage in wind, hurricane insurance in Florida, right? That, let's say for simple numbers, will be $100 million in premium, right? That I have to bring in. I insure $100 billion in property, let's say. So out of that $100 million in premium, I need $60 million modeled in reinsurance, right? That will pay 95% of the claims if a catastrophe hits, right? So where do I get that money, right? Because I'm a syndicate, just like in real estate. I start an insurance syndicate or a pool, right? I get it from institutions. They front me the $60 million, right? I go to Lloyd's of London. They model it out. They go, okay, here's your $60 million. You're reinsured for $100 billion in property. I'm going to go out and sell $100 million. So on $100 million, you have $60 million in reinsurance, about 15 to 18% in commissions between wholesalers and retailers because you got to move the product, and 5 to 7% admin. And then the back end, right, could be 20%, right? And if there's no hurricanes and no things, that's profit that's split between the institutions and the syndicators, right? So what happens when you raise interest rates, right, to 5.5%, where over the last 8 years we were where? Free money, right? Where were institutions making money? Insurance pools, right? So they invest. Today they're not investing, right? I can buy a 3-month T-bill today at 5%. Right? So the institutions are in safety, screaming recession. We have a political year coming, right? So there is no capacity in the insurance markets because last year, all the institutions got destroyed, right? They got their principals back and everything like that. No returns, and plus they paid out. And 13 carriers went bankrupt, insolvent in the state of Florida, right? So they all lost. So now, how do I bring institutions back into insurance, reinsurance, which resets every quarter, triple the price, quadruple the price? Because I'm not taking risks when T-bills are 5%, right? So there's your double whammy, right? So what's happening in the insurance markets in Florida, there's no capacity. We're at 20% of the capacity that we had, right? Now I can throw in fraud, and what DeSantis is doing, public adjusters. And listen, there are good public adjusters, okay? So I'm not putting them down because you do need them and things like that. But like when Hurricane Ian hit, we're a big seller of Universal, right, for residential, right? It's an admitted carrier. My representative called me, and they had 650 claims for Universal Property and Casualty in Dade County, which is South Florida, okay? Where was the hurricane?
Fort Myers, otherwise, yeah,
exactly.
Yeah, 100 miles away.
Yep. The paper says if you have a named storm within 250 miles, right, you have a claim. So they run around with an American Express card, right? You sign it, we'll get you a new roof. They subrogate it, boom, it's done, right? They send it over a third party, they file the claims. So you have a lot going on, which we do have insurance reform in Florida. Some people like it, some people don't. But back to that that's what's going on. We have one client, right? I mean, if I could urge anybody, if anybody is a multifamily owner, retail, industrial, or even a residential home, right? Do not wait for your renewal. Don't sit around. I will mention solutions, right? Solutions, not the problems. Right?
Problems first.
Right.
Yeah.
So I'll give you a client. He's got 72 units up Space Coast, Jacksonville, 72 buildings, a couple thousand units, right? $138 million TIV, total insurance value is what we called. Last year, he paid $850,000 in insurance, right? And I keep convincing, I go, we're not going to wait. We have a plan of attack. The renewal finally comes, right? And used to get renewals 30 days in advance, right? There's no capacity. $135 million in property, right? And, again, replacement cost value. He gets the renewal, $850 last year, $1.4 million this year, and out of the $135 million, $5 million in wind with a 15% deductible. I mean, it's not even insurance, right? Why did it go to $1.4 million and I lost $130 million in wind coverage?
And your lender won't even probably accept that.
Well, lender will not accept it, right? The majority of the loans are non-recourse, Freddie, Fannie, right, which are extremely stringent, insurance guidelines. So, I mean, it's a disaster. It's happening everywhere. So I put out the first video in, August, September, after the storms hit. This was before interest rates went up so high, warning people that this is coming, right? So we deal with a lot of, real estate investors, residential investors. We're an agency of entrepreneurs for entrepreneurs. That's one of our slogans, right? So what happens is we do all their multifamily and then their, commercial, industrial. Then they buy their residential houses, their large houses. So we do that piece. And warning everybody and our strategic partners, right? Like the Daniel Cunninghams of the world, our mutual friend, the commercial realtors, the banks, all of them, right? I go, commercial real estate and residential, it could come to a standstill, right, next year because of that, right? We're in a 5 cap market, right? 4.5 cap on multifamily, which is a 0 cap in my eyes. Well, now they can't even what happens when the insurance was $9,000 on a 6-plex? Now it's $18,000. Say goodbye to your cash on cash, IRR, all that. So
if you have any cash flow at all after
it's
insurance.
Done.
Yeah, and with rising taxes too, because obviously property values are going up. So
correct.
Yeah, I think we're going to start to see some multifamily owners getting buried here soon.
Right.
Yeah.
So it's coming, right? Especially with rates if it stays
up.
Yeah.
At 5+%.
Exactly. Yeah. And now the people that didn't lock in at 2.5%, 3% 4 or 5 years ago.
Or, they're talking about, what is it, 1.5 trillion, I think I heard that's within the next 2 to 3 years of commercial loans that are coming due because these reset every 5 to 7 years
right. It just
on average.
The Journal, a big syndicator lost 1,200 units in Houston.
Yes.
Yeah, a lot of people,
Scary.
Scary. So it's coming. And that was a Freddie deal, right?
Yeah.
So those are non-recourse loans and things like that. So I'm just telling you, don't sit around and wait. There is a solution, right? And this is what government is for, right? And I like our government in South Florida, right? I mean, for, certain things and certain things I don't. But the point is Citizens, which is, we call it the insurer of last resort, but it's a government entity, right? To protect the state of Florida and its property investors, its homeowners, and everything like that is backed by taxpayers. You, me, all of us, right? For this reason, right? And that is the solution. But here's the issue, and this is the word on the street. I compete with the Brown & Browns, the USIs, the Fortune 500, the Marshes, and stuff like that. And 90% of those agents, they're in the commission business, right? So that agent who's making 12% on that policy, for example, that went from $850 to $1.4 million, he knows he can put them into Citizens, right? We know it's worse than dealing with immigration, the Department of Motor Vehicles. It's a 28-point process. I need appraisals. I need inspections. I need roof replacements and everything like that. But by the way, Citizens isn't that expensive, right? And it's not a 300% increases because of capacity. It's a body of legislation, right? That they passed one rate hike last year at 8%, and this year it's 18% rate hike. It's not 300%. Right? So it exists, but these agents, they don't want to deal with it, right? Not to mention, they're going to make a killing. A killing. Their revenue will double, right?
Well, let me give you back to my example. In my portfolio, 35 units, it's not a huge portfolio compared to many of your clients, but you took over my portfolio. You submitted the change of agent information, and I think my agent just realized that yesterday. He emailed me and said, "Hey, Jaron, I saw this. Is this a mistake?" And I said, "No, it's not a mistake. I'm transitioning agents." He said, "What did I do wrong?" And I said, "I've asked you multiple times over the last 6 to 8 months, can you find me better rates, better premiums? My premiums are going up exponentially." And you said no. And I said, I was forced to go out and shop, and I found Jerry. I met him, and he's done an amazing job. And he brought my insurance just on that one property down 50% of what it was going to be, and he's saving me money on all my other properties. And he said, "Who are you going with?" And I said, "On that policy, Citizens." He's like, "I don't even know how Jerry was able to do that."
That's the key.
So, number one, you're talking about their incentives are misaligned because they don't necessarily want to save you money because it costs them money and their commissions, but it's also a knowledge gap. Not all agents are made the same.
Correct.
So I don't know if you've experienced that.
I totally agree with that. I've dealt with this more so recently too. There's new processes in place as well for Citizens to approve certain homes to get insurance too. And we've had buyers shop like 6 different insurance people. 5 of the 6 said, "Can't insure this, period, you can't do it."
Right.
And then one guy that understood, like you understand, shows up and is just like, "This is how we do this. Yeah, it's going to take work.
It's going to take work.
I got to do all this stuff. I got to wait for them to approve it, all these things, right? But we can do this." And so we've closed 2 deals recently on the resi side doing that process. Otherwise, no insurance available.
No insurance, right. It's zero, right? How do you close deals, right? It put this at a standstill. So, yes. So when I saw this in September, and again, this is the second time we've seen this. The difference today is the interest rates. Last time was Doug was the master of this. That's Doug. We learned it from you, right? He was the master because he fell in love with the problem and fell in love with the solution because I wasn't going to accept my cash on cash disappearing. And the lenders are underwriting debt to equity ratios, right, at 1.25 last year, right? You buy a 5 cap. Right, so let's say you're at a 7% cash-on-cash return. Now you're at a 0, right? And the lenders are still demanding the insurance requirements in the win because they have to protect their money and everything like that. We understand it, and the banks own them and everything like that. So, but you're going to be underwater on all these deals, not only because of interest rates, but insurance and so on. But you're absolutely right. So I scrambled, and you have to make it affordable, right? Because in crisis, there's opportunity. There's also gouging, right? And this is a crisis. So in September, we scrambled, right? I trained inspectors on the residential. Residential, the industry exists for a little while, right? So people know how to deal with Citizens. Commercial, nobody's been doing it because we've had E&S markets fueled by massive capacity, commercial insurance going down, no storms for how long, and institutions pouring in, right? When there were interest rates were nothing, right? So we were good, right? Well, now it's the opposite. So we trained people on Citizens. We took courses. We took learning. And by the way, they tell you A, it's really C. You're dealing with the government, right? And you're dealing with, it's very difficult, very difficult. But as long as you disclose the process, we mastered the process, then you can stick it to them, meaning the government has to be accountable to their own process, regardless if someone says, "Oh, I don't like the pictures of your roof." That's not what it says. The engineer says 5 years, useful life, things of that nature. We had a client get a state rep involved with Citizens, but there are solutions, right? And believe it or not, if you do it, your insurance will be less than last year, right? That's the joke,
wow.
Right? And it'll be less than last year We have an in-house inspection team that can handle commercial. They'll run all over the state and some strategic partners. You need appraisals, replacement cost estimators that are certified by appraisers. My property management, who works for me, has an appraisal license. We do it in-house. We charge $300 for a commercial property, not $5,000, right, on an appraisal, because it's not going to work, right? This guy's got 72 buildings, right, on 6 locations, right? Remember, each building has to be underwritten in Citizens. Replacement cost estimators with a real appraisal in the commercial world, right? Then inspections, roof, electrical, wind mitigation credits, right? Fire resistance, the cheapest. It's also wind resistance, concrete roofs and things like that. And then you got to upload it to a government website portal, right? A 200-page merge PDF with color photos. My staff is working 7 days a week. Like, it's unbelievable, like you mentioned, and they're overworked, right? But, like, we're bringing on like $1 million in premium last month. Because what's happening is the other agents, first of all,
they're not able to do it, and are unwilling to do it. Yeah.
Unwilling, afraid, and they're making a killing, right? Yeah.
It sounds also like they're not set up to do what you can do. I mean, you have a moat around that right now because they don't have the humans probably to do all that legwork, right?
Yeah. So you had to prepare, right? Yep. And I've been warning it, right? And that's, kind of how we met because there are strategics and the commercial realtors. I mean, commercial real estate, they can't get deals done. And if you're using non-recourse lending, forget about it. So I had one other solution. I approached a local credit union, right, that wanted to get into heavy commercial lending. They've been around. They're $5 billion in assets and stuff like that. I know a couple people on the board. I approached them in September, and I said, if you waive business income, right, because Citizens on the commercial side doesn't do business income, and if you waive wind you can pick the properties. You can tell the client to put a new roof on. You can tell them that instead of spending $100,000 insurance, do hurricane windows, right? New construction codes work. They're class 5 hurricanes. We've been through I don't have wind insurance on my house. Newer construction. I sat in my backyard having coffee, through my hurricane glass, watching Wilma go by, right? Flood serious, that's another thing. So I approached the credit union, and they agreed to do it, right? Mitigate the risk. Because why? It's a nonprofit, portfolio lender. They loan members money, right? We referred them over $70 million in loans. Wow. And they're willing to do it. Right, 24 to 36-month window.
Thinking outside of the box.
Right, thinking outside of the box. They're not going to give you no wind insurance, on a
probably near the intracoastal.
Right, on top of the ocean. Right. But if you're 3-4 miles back, right, or west of 95, right, newer construction, this class goes even 1960s, 70s, what we call joist and masonry construction down here, they're willing to do it. These buildings have been standing for 50 years, 60 years. That other one up there is a concrete, it's lower income housing. They're concrete boxes, concrete roofs. They've been there since 1954.
Right.
Right? So the point is this is when you fall in love with the problem and then you deliver the solution.
That's right.
And strategically, it's really, that was one of my best things.